Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 3rd of November here in 2022. We had another sell-off, and the markets, at least the equity futures, are down about another 1%. Key here is the NASDAQ. The NASDAQ is down 2%, and it is almost at our target, yes, target, of new lows on the year. That is led, at the moment at least, by some of the big market cap name. So why is the NASDAQ down so much, and how can you visualize this, or at least think of it, in terms of your trades or positions? Let's just go to the market cap of the stocks in the S&P 500, or in this case, the 100. They'll rise to the top of the list. So sorting this by market cap, double click, and we see that the biggest names in the S&P 100, of course the NASDAQ would be just the same as these, are Apple. Apple is above the $2 trillion market cap mark. Microsoft is right behind it, just by about $500 billion behind it or so. And that's about $1.6 trillion. Beneath that is Google, which is at threat of losing the $1 trillion market cap status. Amazon has already lost it, as has Tesla, and a stock that we used to look at very frequently here at TheoTrade, very frequently, is Facebook. Facebook has well since lost that $1 trillion status and has fallen out of the rank of the top 10 in market cap. And behind that, of course, is going to be Berkshire Hathaway, not in the technology index. UNH, Healthcare, ExxonMobil has crept its way higher, as has UNH and some of the other names that you see in the top 10, Visa, Johnson & Johnson, and others. Now that just gives you a sense of market cap and weighting. Weighting means the larger this market cap is, the more point totals get added or subtracted from the NASDAQ and the S&P. And all of those at the top of the market cap list were weak, down 4, down about 2.5, down 4, and Amazon down 3%. This is the going theme for 2022. That interest rates are going up. Of course, inflation is the catalyst why the Fed is raising rates, and the raised rates, higher interest rates, raised by 0.75 or 75 basis points in yesterday's session, is continuing to pull stocks in the NASDAQ or the technology sector, here is XLK, to the downside. Let's highlight a couple of those names just in our big market cap list. We'll see if there are similarities in them. So first up is going to be Apple. And Apple, we'll just highlight this over here into our daily and hourly chart. In fact, let's do a weekly perspective on the right and a daily perspective here on the left. Apple is actually the stock that has held up in 2022. Held up just means it's gone more sideways than down, and it does have room to continue on the downside. Just to compare Apple, which is the strongest or the leadership in the entire market in terms of market cap, behind that's going to be Microsoft. Compare, contrast, Microsoft has had a persistent downtrend, lower lows, lower highs, falling averages, and better trades on the put or the short side of the market, and not like Apple. Although put plays have worked well, Apple's not off in a persistent downtrend like Microsoft. And its weekly chart is right here. Behind that is going to be Google or Alphabet, which is itself coming down. Now it's split, so has Amazon, from the 150 adjusted position. And that is down to around 85 per share at the moment in a persistent, continuing, and ongoing daily chart downtrend. And behind that, once again, we have Amazon. Amazon is seen on the right on a persistent fall or slide or sell-off. It, again, is split adjusted from the roughly 190 or 185 per share. That was well above 2,000. So was Google. And that's currently now under 100 and into about 90. These stocks are on the sell side. These continue to have bear flags or short sell positioning, and these continue to make new lows. So those will be just a few of the stocks that are leadership in the market cap, but there is one major difference. And it is one of the only sectors that was up today. In fact, it was up 2%. It's the energy sector and one of the largest market cap names in the energy sector, this is a sleeper to watch, is ExxonMobil, because it is a strong stock getting stronger. And in fact, comparing it to other stocks that are down 20, 25, 30, 40, 50, some cases more than that percent, ExxonMobil is actually up around 90% from the beginning of 2022. That's why it continues to slide higher or creep higher in the list of a market cap, while the technology stocks, which were well above it, are creeping lower. And the same logic for ExxonMobil will take place in CVX. CVX is another oil-centered company, and that contributes to the XLE, which has been and remains our strongest ETF through the bear market of 2022. So these are things to watch, but those are stocks that are defying the bear market. Many stocks are not. So even looking at market cap leadership, I like to scan each, try to do it every day, but every other day or at least a couple times a week, of stocks making new 52-week lows. And I like to present those here in the videos just for stocks that can give potential trades off on the downside under the logic. That which is weak now does tend to go on to get weaker in the future, and that does set up bear positions or put positions or other type of trades that will get you into the ongoing weakness. That's the main idea, at least. So in these contexts of the stocks in the S&P 500, 43, which is about 10% of the entire S&P 500, are making new 52-week lows. Of interest, they are again in the technology space or technology sector, but they also include retail names such as Estee Lauder and other financial companies and some real estate as well. But this is a list you can generate each evening or each weekend, and that's just done right here. Load scan query under public. Go to stocks making new yearly lows. Scan that in the S&P 500 and you are good to go with that list. Back to the same logic. Which stocks are making new lows, and is there anything significant or similar about them? Yes, they're in the technology sector in general, but they have had downtrends all throughout the bear market in 2002. Now, the fact that they're making new lows on high volume is a similar thought or similar data point to earlier points in 2022, and these stocks do have better odds to keep getting weaker or keep going down, and we can see that from the perspective of the chart, or see that from the perspective of fundamentals, and we can see that again looking at other stocks such as Meta. We're just combining the fundamentals and the charts. Meta and Amazon and some of the other stocks have had persistent, and Meta is once Facebook, the stock we used to know as Facebook, but in our fundamentals we can see the stock data, stock metrics, earnings per share, etc. But that will translate into weak getting weaker. Meta finds itself under the 2020 or the early part of 2020 COVID or pandemic lows. This is a big decline from its almost 400 per share all the way down to 90. Google is not dissimilar. And again, back to its Analyze tab, you can see the recommendations, see the data, and on earnings, we can see that Google or Alphabet has had a tumble in earnings per share over the last few quarters, alongside the stock going down with it. And then Amazon, not too dissimilar, but the other companies here making new lows. Qualcomm will be on that list as well, that just had its earnings. So earnings still are in focus. Downtrends are continuing. Weakness in technology still is the name of the game. But quickly as we review, the bigger picture is taking place in the bond market, which itself has another short sell or bearish opportunity to potentially make new lows on the year. That's ZN, that's ZB, and behind that is the 10-year Treasury note, or the TLT, which is a little bit longer dated U.S. Treasury ETF. A similar product would be the IEF for the shorter term 7 to 10-year U.S. Treasury note. On the other side of the bond market is the yield. And the yield continues to play to the upside, which is a bull flag or pro-trend, uptrend continuity that does give a risk-controlled trade to play or put on a call or bullish type position in that or the dollar index, which also has its similar uptrend move and similar play potentially to 114 or higher, and that will be in or translated into UUP or other ETFs that might be related to the dollar. Of course, that would go into Forex, foreign exchange as well. But that does continue to put pressure on the equity market. It does continue to put pressure on the bond market. Pressure just means likely additional selling, and these ongoing trends continuing rather than reversing. Now, I would not be doing my job if I didn't mention that tomorrow we will be having on the calendar, we can see this will be the jobs report. First Friday of the month, we'll have the employment situation, and the expectation is that it declines a little bit from the previous almost 300,000 jobs added. The expectation is 200,000, and of course that's going to go down to labor force participation rate and other statistics from the monthly jobs report. It will be a big one, and we'll see the expected move just quickly in the S&P. Expected move for tomorrow's session on the jobs report, which will occur pre-market, will be about 90 points up or down, and in the NASDAQ, roughly 194 points up and down for the expected move tomorrow for the volatility, for the jobs report. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for November 3rd, 2022.